Thank you, Mr. Bornozis, and to all the organizing committee of this Capital Link forum. I'll get straight to the topic, which is obviously all an investor needs to know about Greek shipping taxation. It may be all, it may be less. You'll tell me after the end of the presentation. Starting with a brief outline of my presentation, we'll start with a typical structure of the group of shipping companies, because based on the various types of entities, the Greek legislation distinguishes and applies a different tax regime, basically. So it will be a different regime for ship management companies, different for ship owning companies for vessels flying the Greek flag, ship owning companies with foreign flag vessels, ship brokerage companies. Then I will elaborate a little bit on a couple of types of transaction, some fairly simple tax exemptions there. Because there's a lot of debate about Greek shipping taxation and the regime currently applicable, I'll try to explain the rationale of the law and why it is what it is. Plus, we'll end with a couple of hot topics, which are fairly recent developments of the past 6 months, which concern very much most of our clients. Now, starting with the basic group, everybody knows that, but this is how the Greek legislature has it in mind. It distinguishes ship-owning companies, single-vessel companies, the holding company. Interestingly enough, the concept of the holding company was, in quotes, recognized much, much later than it was introduced in practice. So a lot of the deficiencies were covered as recently as 2010 for the holding companies. The ship management company, which may or may not be affiliated with the shareholders, but this is a really basic structure. In fact, in reality, things are much more complex, but this is a common version of a publicly listed shipping company, where we do have first-level holding companies, the vessel at the very bottom, a second-level holding company, usually the publicly listed entity, and then portion, obviously, of the equity is free float on the public market, and a significant portion may be held by the major shareholders. Usually Greek owners like to maintain more than 50%, but nowadays their percentages have dropped much lower. So this is basically what a listed or even a private company would look like, more or less. Now, with regards to ship management company, this is what really is recognized by Greek law as the office of having a proper establishment in Greece. This is really the heart of the shipping company, and it actually is the most flexible vehicle pursuant to which Greek shipping has flourished, among other reasons as well. There are several exemptions for this particular entity, so basically there are no income tax, no other levies or contribution, no withholding tax in favor of the state or any third party, and it's basically provided that the company undertakes the activities that are specifically mentioned in the license of establishment. Now, basically, there's another interesting exemption which relates to stamp duty. We're often called by investment banks when their foreign private issuers issue equity to opine on all these issues, and gladly speaking, these are the issues that we can readily opine on. Of course, the past 5 years there have been several legislative changes that one needs to take into account before issuing such opinions, and this goes mostly to the underwriters. Now, with regards, there are some other also exemptions which are a little bit more technical. I would not want to elaborate and bog you down to the details, which relate to some real estate taxes, like the 15% for disclosing the ultimate beneficial owners. There is no requirement to do that, and there's an exemption. With regards to VAT, typical regime applies, but these type of companies are entitled to claim back VAT. Now, what is really important, because we often get these questions, is for the ship management company to undertake only these particular activities that are listed in the license. So that would be management, operation, chartering of vessels. It may be a ship brokerage firm, which also has a slightly different regime. We'll see that later on. And then it may also act as agents on behalf of shipping companies. This is also useful nowadays when some of the foreign banks require shipping companies to locate their offices or some sort of office so that they may be characterized as operating or active financial entities. The ship management company could be considered as acting or providing offices for the ship owning companies. Banks often inquire that, and they do require also letters from the ship management company to prove that this particular ship owning company has some sort of office, although it's not considered a Greek tax resident per se. Now, a precondition, fairly simple, most of you probably know that, it needs to cover all its expenses through Greece through foreign exchange that is imported inside the country with a minimum threshold of 50K, and generally all payments on behalf of other parties like ship-owning entities have to be done through Greece. Basically, when done through Greece, they have to be done through imported foreign exchange. So a common mistake done is, a ship management company may pay its lawyers from abroad, but may wire the funds here in Greece, let's say in dollars. That will be a mistake, which theoretically could get them in trouble. Now, ship-owning companies with Greek flag vessels. Although the regime now is fairly similar with foreign flag vessels, the underlying legal framework is fairly different, and there's a key difference because of the provisions and how they are protected under the Greek constitution. So we do have the tonnage system. That's obviously something very old. It applies to many other countries as well. It relates to capacity and age of vessels. And basically, once this tonnage tax is paid, it exhausts any obligation of the ship-owning company and its shareholders towards the Greek state. So basically, what an investor and an underwriter needs to make sure is not only that it's a properly established office here, but it does pay its tonnage tax in time, and it does have a tax good standing certificate, so to speak. Now, also there's an important exception for any surplus value. I've tried to translate the exact text of the Greek law, but any such value is also exempt from tax, whether it's from the sale of the vessel, whether it's from insurance proceeds, or from any other source, which is a fairly vague expression which has caused trouble throughout time, but has also been very helpful. Now, by virtue of an official opinion of the Legal Council of the Hellenic State, it's been clarified many years ago that dividends distributed upstream until the level of the ultimate beneficial owners, no matter how many holding companies we have in between, is also exempt from taxes because the tax obligation is exhausted at the level of the ship-owning entity. Now, the key provision is here, obviously, Article 2 of Law 27, 1975. And there's also a special legislative decree pursuant to which most Greek flag vessels are registered. These two provisions have constitutional protection under the Greek Constitution, Article 107. Now, one myth, to allude to the topic of my discussion, is that many clients think that the entire regime is constitutionally protected. Actually, it's not. Only Greek flag vessel regime is constitutionally protected. Theoretically, any government with a simple law could change the foreign flag regime that we're going to see in the next slide. We do not have any such indications, obviously, but it is a common misconception that the entire regime is constitutionally protected. Actually, no, it's only for Greek flag vessels. Now, going to foreign flag vessels like ship-owning companies which may bear the Cypriot flag, Marshall Islands flag, or any other flag commonly used, if these companies are managed from Greece, their vessels are managed from Greece, fairly recently, from January 1st, 2013, the same tonnage tax regime that applied for many, many years for the Greek shipping companies, the Greek vessels companies, was actually imposed also on foreign flag vessels. That was given in exchange of basically maintaining this tax exhaustion or tax exemption in terms of the dividend level, which you see right below under Article 26 of this famous Law 27, 1975. Although the law is of 1975, over the past 5 years, we've seen several changes, many more changes than we've seen over the past 30 years. Nevertheless, with these recent changes and this fairly low tax imposed, a lot of the gray areas have been clarified, and most of the publicly listed companies with offices in Greece, which basically have foreign flagged vessels, clearly can have no concern that the dividends, basically, there's no withholding tax on dividends, and that the international investors can definitely receive their dividends exempt, at least from the Greek state tax. Of course, in their own jurisdiction, they will have to do their own search. Now, there are the same criteria that apply for Greek flag vessels, and the numbers are also applied to foreign flag vessels. And basically, what is important is that usually the tonnage tax, which is payable at the local jurisdictions, the Marshall Islands of Cyprus, is subtracted from the Greek tonnage tax. So overall, you have the same net result as if you had a Greek flag vessel. Now, it gets a little bit more complicated a bit later, but let me start with a few observations, because some people ask, why do you have the tonnage tax regime? First of all, it's not a Greek originality. Many states have that. Many EU states have the tonnage tax regime with some differences. And the basic reason it was established almost 50 years ago, and then it was reconfirmed in 1975, was because the ship owners wanted a stable taxation system to calculate budget taxes. Unfortunately, now that, especially in the dry bulk industry, they have losses, it's not to their best interest, but still they prefer to be able to budget their taxes. Now, it entails a minimum involvement of dealings with the Greek bureaucracy, which can get a little bit nasty sometimes. Now, an important piece of legislation which was introduced thanks to the Union of Greek Shipowners was Article 44 of Law 4141. This is really the Bible of any Greek tax resident ship owner, because it states exactly the provisions on how they can receive dividends from entities, whether they are Greek flag vessels or foreign flag vessels. There are simple rules, but they have to be adhered very carefully, because there are very strict tax audits over the past 5 years. And because of minor deficiencies, we've seen huge fines on that. Now, as I said, it gets more complicated, and because another myth here is that ship owners have not been taxed over the past few years during the Greek financial crisis. Actually, that's not true at all. Besides the solidarity contribution, with this weird name, which applies basically to all Greek tax residents, this also applies to Greek ship owners. There are some issues about its constitutionality, especially with Greek flag vessels, but it's being imposed and it's being paid by Greek tax resident ship owners. And when it comes to numbers that mostly concern our clients, above 100,000 euros, it will be 6%. Above 500,000 euros, it will be 8%. But that's as much as they pay in addition to the tonnage tax so far. Now, in 2014, actually the effort started much earlier. There was a voluntary contribution of the Greek shipping community. This was done voluntarily because of the constitutional difficulties for Greek flag vessels. And despite several concerns, most people considered that that was a success of the Union of Greek Ship Owners to be able to get together the entire community and gather significant amounts. Why? Because they took a decision in accord with the Greek state to double the tonnage tax payable over the years 2014 and 2017. Now, this double tonnage tax for these 4 years, even the initial Greek tonnage tax, is much higher than the tonnage tax you see in most other jurisdictions where you see basically either flags of convenience or even like, say, Cyprus or other EU flags. So the Greek tonnage tax is on the high side. The benefit, as we said, is obviously the exemption at the shareholder level, but still, it's really something that one needs to bear in mind whenever basically, foreign ship owners will often say that, the Greek ship owners are not taxed. Now, the overall target is to, over these 4 years, to acquire, the Greek state to acquire about 105 million from the shipping community and overall 420 million. This will be reevaluated based on the earnings that the Greek state will have received by the mid-2017. So taxes have increased in shipping as well. Now, ship brokerage companies. Ship brokerage companies actually have a different regime, slightly different regime. They do have exemptions at the company level, at the corporate level, other than a levy, which may be small, or higher depending on your perspective, which is according to the table there, and depending on the annual imported foreign currency, so the actual expenses they spend here. Of course, actually, that was not the smartest decision from the Greek state, because basically this incentivizes from ship brokerage companies to bring foreign exchange inside the country. But this is how these companies are taxed, in quotes, at a corporate level, plus a 10% tax on dividends was applied for these companies as well. 10% is also applicable as if I were to get, like, say, dividends from Apple stock. That's what I would actually pay, 10% on dividends. So basically streamlined with what is applicable for other foreign companies. So ship brokerage companies also do pay taxes at the corporate level, the annual levy, at the shareholder level, the dividends. Now, basically, a couple of questions we often receive, and where the regime is really favorable for ship owners and also for investors, is that there is no share transfer tax. That's very important, because for all types of transaction, whether it's a sale, it may be questionable if it's a donation of shares, but technically speaking, the wording is fairly broad of the law. And there's also no capital gains tax. Now, something which usually concerns Greek owners is inheritance tax. There are 3 different provisions partially overlapping which cover this issue, and basically there is no tax when transferring either the ship itself or the shares of the ship owning company or the shares of a holding company of ships. Now, obviously, people ask, is there a rationale for differentiating this type of activity from other activities of the Greek economy? Well, for those of us that work in the shipping economy, there is a rationale. This is not the result, but it is the rationale, I would say. Some people say that this is why Greek ship owners are first. No, it's not because they got these exemptions. There are many other reasons why Greek shipping has thrived throughout the past decades. But it clearly is maybe the only field where Greece is top at the world economic level, and maintaining a regime which allows ship owners to have a steady taxation regime, to be able to import dividends inside the country and use them as they deem appropriate, and then tax, whether they buy real estate, whether they buy a car, or whether they invest into a new project, they do get taxed as any other individual. The goal here and the rationale was to import foreign currency inside the country. So Greece is at the top of the list. That does not mean that all these 4,000 vessels you see there are necessarily of Greek interest. But if you were to see a massive change in the law, I'm pretty sure that Greece would not rank top on the list. As I said, we do not have any concrete indication for such a change. Now, contribution of the Greek economy, I will actually go very quickly through that. There's been a lot of discussion. The interesting thing is that there are 2 studies, one of the Boston Consulting Group and one of EOVE, which is a Greek Foundation for Economic and Industrial Research, of 2013, stating down the numbers with empirical data of the real contribution of shipping to the Greek economy. There was an article in Reuters like a few months ago saying that it's actually a myth that Greek ship owners contribute to the Greek economy. It's fairly easy to calculate the numbers, because each ship management company needs to declare the amount of foreign exchange imported. So by adding up these numbers, the Greek state knows exactly how much foreign currency, and generally, even whether it may be US dollars normally, other currency, or even euros imported from abroad, is contributed to the Greek economy. This may actually re-exit the economy somehow, but it has most of it is being infused in the economy. There are direct contributions with basically employees of the company, the ship-owning companies and the groups, indirect contributions, or the service providers and professionals that are located here, whether classification societies, shipping agents, etc. And basically, there are other areas of contribution, like balance inflow is very important, creating jobs, we just said. Investing, many ship owners have invested in various other fields, whether it's tourism or whether it's real estate, whether it's energy, transportation. And of course, there's a big portion of contributions coming out of donations in various fields of the Greek life, whether it's culture, education, health, or social welfare. So clearly, if one actually sits down and analyzes these factors, they would see that their numbers are much higher than even the pure figures. Now, coming to the hotly debated issues now, is there a Greek shipping taxation regime under attack? My answer is no, but there are a couple of recent developments, one of August 2015 and one of December 2015, that raise some eyebrows, I would say. Obviously, as you know, with the third memorandum of understanding with the Greek state entered with its EU partners, some language, fairly vague, is introduced therein. It says that Greece is committed to phasing out, and this is, quote, the English text, treatments, special tax treatments of the shipping industry. Now, what that means and how will it be implemented, it's not clear at all. And so far, I mean, even in a similar conference like this a few weeks ago, the Deputy Minister of Finance says there's no intention of changing the regime itself. After all, even the Troika itself and the government knows very well the benefits I just described. Now, they have also, however, alluded to the fact that they will extend this double tonnage tax regime for 2018, and this is also contained, just a short sentence in the MOU. Now, in December 2015, an interesting development actually it has started already since 2012. The EU Commission started scrutinizing the Greek tonnage tax regime with regards to state aid regulations and laws. Now, there's a lot of discussion going on regarding this topic. There are arguments going both ways. The EU Commission has issued a press release, and it will soon make publicly available its decision, which is a fairly lengthy text, and it expects a response from the Greek state. An official response, my understanding is, the Union of Greek Ship Owners has responded with a short press release, but fairly substantiated, and it's the important thing for the Greek state to respond. One thing to clarify: they do not go against the Loyalty 9 company nor the tax regime itself, but they do question some of the parallel exemptions I just mentioned, like inheritance tax, dividend exemption and dividend taxes. These are the types of stuff they actually allege the Commission alleges as being tax state aid, basically. So ending up with our conclusions, I mean, personally, I think it's a myth that Greek shipping is not taxed. The reality is that it is taxed, but simply in a different way. Throughout the past 5 years, the shipping cluster, to use this generic term, has seen a drastic increase in its taxation, as every Greek basically has. And the special treatment is due primarily to a contribution on the one hand, and that shipping basically, the income is derived exclusively from seaborne transportation activities performed exclusively outside Greece, with very few infrastructure from the Greek state. Of course, the Greek state, and we have to admit, has facilitated this industry with the legislation I just described. Now, the substantial contribution I briefly alluded to earlier on, and basically it's one of the few sectors of the Greek economy that, as we said, the legislation has played an important positive role without, in my view, being a state aid, and it is up to the Greek state to forcefully defend this regime. After all, Cyprus, with a very similar regime, obtained an exemption in 2009 for 10 years for a very similar regime, tonnage tax regime, from the very same EU Commission. So the timing is at least inappropriate for the EU Commission digging into this matter. Last but not least, as we said, it's a top field, the Greek economy, where we have positive rankings, and the relevant legislation should be viewed as an example rather than a species for extinction. Thank you very much, and I'm happy to take any questions.